So you're thinking about investing in pharmaceuticals. Well, today we're going to talk about a very big player in that market, and that is Abbvie. Now, again, the pharmaceutical industry is a wide industry because you can be involved with preclinical trials, which is the development of pharmaceuticals, you can be involved with the manufacturing, and you can be involved with the distribution. Well, Abbvie is one of those major players that actually plays a role in development, manufacturing, and distribution. So, like with any stock that we review, the first thing we want to look at are what is the problem that company is solving. So when we look at the product categories, the first one we look at is immunology. Now, immunology is where companies make drugs or pharmaceuticals that solve a ton of issues. Some of those issues may be related to heart problems. Some of them may be related to arthritis and different pains or Crohn's, different areas. And when we look at Abbvie, they are making products that are solving a big problem, because when people have problems in these areas, people want solutions and they're willing to explore different options to solve these problems. And then the next area of problems that they're solving is in HCV. Now, that may be a different way of just talking about categories of diseases that impact the liver. Now, that is a very, very big thing that a lot of people are having challenges with, and they're providing a solution in that area. The next area is down into oncology, which is, I guess you would say, the area of cancer, as well as they also make drugs and pharmaceuticals for blood type disorders. So that is another area that is very important and very impactful. And then lastly, they have a other category where they do address a lot of different issues in their other category that doesn't quite fit into the immunology, HCV, or into oncology. So overall, when I look at the products that they offer and I ask myself, are these products solving a big problem? And do a lot of people have this problem? When I look at that, I have to say that they get an A in this area because they're providing solutions to a very big problem that a lot of people are having. Now, the next area I like to look at is looking at their financials, where we can actually see how are they really performing when it comes to their financials. So if we look at their financials, a couple of things jump out to me. I look at their revenue and I see that over time, their revenue was around, 8.5 billion per quarter, and in Q2 it jumped. So the first thing I'm asking myself is, okay, what would cause them to go up by $2 billion in a matter of a quarter? And after doing a little bit more research, I realized that there was an acquisition that they did. So they bought a company called Allergen, and that company actually brought its revenue over. So now Allergen is a part of the Abbvie family. So that explains kind of that big jump there, because sometimes when you see a big jump like that, it's they either bought another company and brought the revenue over, or that is a situation where they've either released a new product and it's just selling very well. Now, another thing that I look at is I like to look at the gross margin to see, hey, how are they performing? Are they able to manage the product costs enough to where they can generate revenue? I guess they generate gross profit on those sales. Now, this is where I start to ask a little bit more questions, or I start to raise an eyebrow when it comes to Abbvie, because as you can see, their gross margin was consistently around the high 70% range. But after they bought Allergen and some other reasons in Q2, their gross margin dropped to 64%. Now, of course, some of that may come because of there were additional costs involved with buying Allergen, and there may be some of that, I guess, that plays a role there. But one of the questions I'm asking myself is, it's great that you can sell products, but can you actually make a profit on the sales that you're generating? And then we look at their operating profit. this is where my eyebrows really go up, because when you look at their operating profit, they've been trailing around the, between 30 to 40% range. But in Q2, their operating profit dropped to 7.2%, which is very concerning to me, because I'm like, this tells me that, hey, there are either some costs that happened that were out of your control, or there's some costs going on that you either didn't expect or didn't plan for, or costs that you can't control. Because at the end of the day, it's great that you can sell a product, but if you can't actually generate a bottom line profit from those sales, then it's a bit concerning when it comes to the area of finances. And when we look at their operating cash flow, we see that, they've been pretty consistent. Their operations are generating sufficient cash flow, or I guess say consistent cash flow to support their business. Now, another thing that jumps out to me is the cash took a big drop from Q1 to Q2 in 2020. I mean, they went from 41 billion in cash down to around 6 billion in cash. Well, again, a lot of that has to do with the acquisition of Allergen. So when I look at their financial performance just as is, it does raise some concerns. Now, I do understand that they just bought a company, and so what we'll have to see over time is how well they're able to manage this new company that they bought, which the company clearly allows them to expand their revenue. But what we have to ask ourselves is, are they going to be able to control this incremental cost that comes with this new company that they bought? So when it comes to the area of their finances, I would give them a score of a B. Now, on to another very important area that probably is the most important for you as an investor is, how are you going to make money? Now, when it comes down to stocks, you're going to make money of one of two ways. I mean, generally one of two ways. It's you buy at one price and you sell at a different, which means you get to keep the difference. Or in some cases with companies like Abbvie, where they actually issue a dividend, where you get, I guess you could say, kind of like a little bonus for holding on to the stock, where the company shares some of the cash back with its investors. So when we look at Abbvie, at the time of recording this, Abbvie's stock price is around $87.83. Now, one of the quick things that I like to look at first is the 52-week range, where we can see in the last 52 weeks, it's been as low as $62.55 a share, and it's been as high as $101 per share. Now, that doesn't automatically mean that the stock price is gonna go back up to $101 at some point. I mean, it just tells you, hey, this is the fluctuation that's happened over the last 52 weeks. But it is a good thing to look at, because a lot of times you see that stocks do kind of flow in cycles. So when it comes to the area of how this stock can grow or how you make money, gave this area a score of a B+. So when we look at the total picture for the product, because they're solving a very big problem, we gave them an A. When it comes down to the financials, because like I said, it is a big company and they just went through some acquisitions, there has been a little bit of noise in the financial performance. But in that area, we gave it a B. I mean, if they can figure out how to manage the cost around the new company that they purchased, we can potentially see in that grow and increase to something higher than a B. And then when it came down to the growth potential, again, the stock has to do something, or the company has to do something very big, in which they're positioned well to do some big things with the acquisitions that they've done, with what's going on in the pharmaceutical industry. And they also have a pretty good, healthy dividend. So in that area, we gave it a B+ as well. So overall, what that means is we've given this company a total score of a B+. Again, if you're looking to invest in any company, you want to make sure you do your homework. And what we do on this show is we get you started by doing a little bit of the homework for you, but you want to make sure if you invest in anything that it is a good fit for your goal and your portfolio. So until next time, thanks.